Could the S&P 500 be about to launch towards 660 on its final leg up? Or are we setting up for a brutal move down to 340 or even 250? This is the moment of truth. Let's go. In today's video, I'm breaking down the full Elliot Wave count, why 475 is absolutely critical, and how I'm personally navigating it. If you like technicals, risk management, and planning ahead of the crowd, this one's for you. Let's set the stage. Since the 2009 lows around 67, the S&P 500 has been climbing through a full primary wave structure, and I'm trying to decide if we've already finished primary wave 5 or if we have the blow off top remaining. Inside this final leg, we're working through intermediate waves of 1, 2, 3, 4, and we're questioning where 4 is going to end, and then 5. Wondering how I got to 660? In a video I released a couple of years ago, I explained why we hadn't topped after we corrected in 2022 since we closed above all-time highs. I will link that one at the end of this one so you get a feel that I'm not just making this stuff up. But to summarize, based on wave symmetry, if the primary wave 1 and wave 3 are similar in length like we had, then wave 5 often extends. Usually this is 1.618 times the net length of 1 through 3. So let's do the math. So if we want to go ahead and run the math, let's see where wave 3 ended. It ended at 339. And if we subtract the start of the first wave, which was 67, that equals the total net, which is 272. If we multiply that times 1.618, like I said, we get 440. And now if we go ahead and we add that to where wave 5 started, let's go ahead and add that 218, we get 658. So let's go ahead and round that up to 660. Now figuring out how long this fifth wave is pretty straightforward. All we're going to do is go ahead and say, okay, the fifth wave usually equals the time length of the first wave. So that started in March of 09. And if we look here, it essentially went to 6 years later, May of 2015. So if we started this fifth wave in roughly it was March of 2020, then we would expect that that's going to end in April of 2026. Like I said, I'll go ahead and post that video at the end of this one. Zooming in on the most recent action, it appears that either we're in the process or have completed wave 4 and we're getting ready to go into that final fifth impulsive wave. And the reason I'm saying that we either completed it or we're close is if you look at this A wave and then we had a B wave that retraced 38%, which then followed by a C wave that is either done or nearing completion. This minor wave, which was a B wave inside the intermediate wave, only had a retrace of 38%. So zooming in so we get a better idea of the minor wave, if we go ahead and we say, okay, this is where we finished that minor and came back up here. Normally, the extension on that wave, that C wave, because of a very short retrace, is only going to be a 0.618 fib level, which means we would have been closing somewhere around 545 on that wave. But since I didn't see the VIX pop when hitting this target, I wasn't convinced, so I waited, and since patient pays, I'm glad, as Friday was bloody with a ton of selling volume as the VIX popped. Also, this RSI on the weekly completely washed out, and all this happened while minor wave C essentially went through that 100% extension area. What this means is that this A wave and this C wave, they're essentially the same in size. Now, spiking through this 100% area is normal, as long as if we look at this wave right here on this third wave, what we don't want to see is starting to get an extension past the 50% retrace. So right now we've gone through the 38% retrace, which is not that normal. Normally, on this fifth wave, you're going to go ahead and turn pretty quickly. But really, anywhere in here is if we're still bullish, we expect to reverse. And if we go ahead and we zoom out just a bit more, there's one more Elliot Wave rule that actually coincides really nicely with this 50% retrace of this fourth wave. And that is if we go ahead and we look at this closing high on the weekly, and we'll go ahead and switch that to a nice little green color here. We cannot violate this fourth wave closing into wave one. If we do that, that essentially means that the count is wrong, that most likely the fifth wave has ended and we are actually in a corrective cycle. So this means that this fourth wave cannot blow through the 475 area. We'll go ahead and round it up a few cents. So being as it may that we're within this area, and we know that the lowest we can go is 475, could spike through it. It's the weekly close that matters. Anywhere in this area, we would be expecting a bounce. And I mean, it could happen as soon as Monday, it could happen later in the week. And then that bounce would take us into the final blow off top for wave 5. And so that means in springtime of next year, approximately a year from now, that means we've completed this cycle and we're going to get ready to start a deeper correction and a bear trend. Now, before I lose you, please stay with me here, as I'm going to show you that signs are lining up with a combination of factors that find market bottoms. In red, I have the VIX, and in this hollowed bar, it has the high and the low of the VIX during the week. And we can see that anytime where the VIX is above 30 as a high during the week. And in blue, I have the high and the low put to call ratio. And anytime we see this spike above 1.4 for that week, plus in the normal candle bars, if you look at these, this includes the percentage of S&P stocks above their 20-day moving average. And when we end up going into the low single digits here, and the weekly RSI is completely washed out, which indicates that the markets are completely oversold. So a combination of all of these things, if we look over, say, the last 6 years, we notice that all of these were major market bottoms, which would have been a once-in-a-lifetime buy opportunity. Currently, factors are pointing to that we may actually already hit that low or ready to do so in the upcoming week. Sometimes it's tough to call it to the day or the hour, as the VIX often tops a couple days in advance of markets bottoming, but it doesn't have to occur that way necessarily. But that's why it still made sense for me to at least start nibbling on Friday. And this time, not really from a trading perspective as I normally do with my signals, but more of an investment, as I've been pretty much in cash since the recent high. But I think here, we got to take a balanced approach, because there always is a possibility, even though I can't really see it, that 475 doesn't hold. And what this would mean is that we are having a market top right here, and we are now in a bear market. So now if we go ahead and let's zoom out once again, because we're going to have to get this 5-wave structure here in the picture. Let's go ahead and grab our fib retracement tool. And if we say that was the top, that means 50% retrace could take us, down around the we'll say 340 area, or if we go into the golden pocket, 65% retrace, that could take us down into like the 250 area. That's the real risk if we break that 475 line in the sand. And I'm not going to be one that wants to ride that wave down. Drop a comment below if we're ready to blow off the top going to 660, or are we ready to start this dot-com bust, which concluded at the end of the great financial crisis. That's right, 12 years of going nowhere. Because if you look at 2000, by the time we went ahead and started breaking above that, it was 12 years later. Eventually, next year, I'll be doing a video as we conclude this final fifth wave. If we do so, I will be doing a video about how we expect a large cycle wave to be corrective. But for now, I'll go ahead and read and respond to your comments below. So what's my plan? It's pretty simple. As long as 475 holds and we don't invalidate that fourth wave crossing below the end of the first wave, then I'm long. I'm a seller if the long breaks at 475 on the weekly, and I would like to see it confirm on the weekly versus instead of just a day below it and then above it. And like I said, I do have a target of 660 for that final wave. Now, what I mentioned was that in this area, I really only started to nibble on some investments, but really what I want to see is some confirmation through some volume that returns in the positive direction, and I want to see moving averages cross and RSI strength before adding more. When it comes to trading, currently my proprietary King Trading algo has been firing very few signals, but that will change if we get into this fifth impulsive wave. If you took every trade this year, you'd still be up about 4% just by following every trade that the algorithm signaled. Or if you went ahead and just took the trades that I went ahead and took off the signal, I am up 8% on those trades. When you look at the S&P 500, which is down about 15% this year, this is over a 20% outperformance. And there's no smoke or mirrors here. I show all the winning and losing trades so you can follow along. So go ahead and join the Discord, as it's not the time to get bearish if the VIX should dump quickly. And that will be a sign to join the Discord by checking out the description below so you don't miss out how I trade any of my buy signals. And it will suggest proper sizing, take profits, stop losses, all identified based on momentum, MACD conditions, and other technical analysis on about 100 different equities. On the flip side, if we start to break below 475, I don't like to try to catch falling knives. There's no point to gambling, on a bounce from 470, say, back up to 480 or 490. Especially when the entire wave structure has been invalidated. Instead, I'll just step aside and let this, come back into either one of these fib levels where I'll probably take a couple shots with investments. If it doesn't work out, the 50% retrace, maybe look at the golden pocket here. And once that primary ABC correction gives us clarity, I'll look to enter at lower prices. Please do me a favor. If you're finding this kind of clarity and structure helpful, hit that subscribe button. And on that note, thanks for joining, as that's all I have for now until the next video, and we'll see you then.